What if you could get a peek inside a professional trading course, one that costs $25,000? Well, today on The Explainer, that's exactly what we're going to do. We're going to use the blueprint of an elite program to really understand the tools and, more importantly, the mindset that separates the Wall Street pros from the rest of us.
So let's just start with a really fundamental question. You might think the big difference is, more money or faster computers, maybe some kind of secret information. But the real gap, it's much, much deeper than that. The truth is, they're playing an entirely different game.
You see, for most of us, investing means trying to pick the next winning stock. Simple, right? But if you could be a fly on the wall on a professional trading desk, you'd hear a completely different language. They're talking about managing these abstract forces, like the acceleration of risk, or how markets behave on very specific days of the month. They're not just picking stocks. They're trying to navigate this incredibly complex system.
And the first level of this professional game, it's a massive shift in perspective. They stop focusing only on which way a stock will go, and they start focusing on how much it's going to move. They literally trade the turbulence itself.
This is this whole concept of volatility as an asset class. For a big institution, all that fear and uncertainty you see in the news, that's not just a scary headline, it's a product. It is something you can literally buy and sell and build entire strategies around. And it's completely separate from the price of the actual stock. So pros look at this in two ways. First, there's historical volatility. Think of that like looking in the rearview mirror. It tells you how bumpy the road has been. But the real magic, the real game, is an implied volatility. That's the market's collective bet on how bumpy the road is going to be. And you know what? The most profitable trade is often found right in that gap between what just happened and what everyone thinks is about to happen next. Okay, so if you're trading these crazy, complex forces like time and volatility, how do you even measure them? How do you control them? Well, you need a brand new dashboard. And for the pros, that dashboard is a toolkit with a kind of weird name, the Greeks. Each of these strange names answers a really critical question. Delta is pretty simple. If the stock moves $1, how much do I make or lose? But gamma, that's more subtle. It tells you how quickly that sensitivity changes. It's kind of like the G-force pushing you back in your seat in a race car. Then Vega tells you how much you're betting on that turbulence we just talked about. And theta, theta is the enemy. It's the constant nagging tick of the clock, just eating away at your position's value day after day. Together, they give you this complete 360-degree view of all your risks.
So, with these complex tools in hand, where do the pros actually go to play this game? Well, it's not always on the big public stage like the New York Stock Exchange. In reality, there are two totally distinct arenas.
First, you've got the public exchange. Think of this like a big department store. Everything is standardized, it's all transparent, and it's open to pretty much anyone. But then there's the over-the-counter, or OTC market. You should think of this as a private, bespoke tailor shop. It's a members-only club where large institutions go to create customized, private deals directly with each other, away from public eyes. And inside that private, bespoke world of OTC trading, they aren't just buying things off the shelf. No way. They are literally engineering financial instruments from the ground up. And this leads us to one of the most powerful concepts in all of institutional finance: structured products. I mean, just imagine walking into a bank and saying, hey, I want an investment that absolutely cannot lose money, but still gives me 80% of the stock market's upside. A retail investor just can't do that. But a pro, they can have that exact product custom built just for them. The process is actually pretty intuitive. It's like building with financial Lego blocks. You start with a safe, kind of boring brick, like a government bond, to guarantee your initial money is protected. Then you clip on an exciting high-performance engine, like an option, to capture all that market growth. And the final creation? It's a totally new vehicle, engineered to the exact specifications of a single client. Now, here's what's really fascinating. When you start creating these custom private deals in the OTC market, you introduce entirely new kinds of danger, risks that a regular investor literally never even has to think about. See, on a public exchange, there's a central authority guaranteeing every single trade. But in a private OTC deal, you're exposed to something called counterparty risk, which is the very real danger that the other side of your billion-dollar bet could just go bankrupt, like Lehman Brothers did in 2008. Then there's liquidity risk. Who are you going to sell a one-of-a-kind product to in a panic? And maybe the most terrifying of all, model risk. What if the complex mathematical formula your entire strategy is built on is just wrong? This stuff is like the final boss of professional risk management. So, the crucial point in all of this is that all these tools, these arenas, and these hidden risks, they all lead to a fundamental difference in mindset between a professional and a regular speculator. And mastering this mindset is clearly incredibly valuable. The professional course that inspired this whole explainer costs $25,000. And that's not for a degree, it's not for a semester, that's for 2 days. That is the price tag on learning to truly think like a pro. So what does that 25 grand actually buy you? It's not a crystal ball. It doesn't predict the future. It's a framework for surviving the future. It's a repeatable system for making decisions, a constant process of managing risk, and the ironclad discipline you need to stick to the plan when your emotions are just screaming at you to do the exact opposite. And this, right here, is the ultimate takeaway. The professional game isn't about being right about what's going to happen. It's about accepting that you can't predict it, and instead building a system and a portfolio that can survive and even thrive no matter what the future decides to throw at it. So after this little glimpse into the professional's toolkit, I'll leave you with a question to chew on. Does all this complexity make the market feel more unpredictable and random to you? Or does it maybe reveal a hidden layer of logic, a game with its own set of rules just waiting to be understood? Something to think about. Thanks for joining us for this explainer.